Yes, yo, it's your boy Eddie Plays. On this episode of Techniques Podcast, I'm going to be talking about cryptocurrency lingos for beginners and investors. Are you finding it hard to comprehend why rolling into cryptocurrency lingo in cryptocurrency forum? Few years back, I remember when I started getting involved in cryptocurrency, I stumbled upon all these new terminologies such as HOLD, FOMO. I was like, what the fuck? If you have found yourself in such condition now, don't be discouraged. I was left scratching my head when I first got involved in cryptocurrency world. So I came up with this write-up. I know it will go a long way in helping you solve out this issue. Every discipline frequently use slangs and acronyms to communicate ideas, concepts quicker than other formal language. The cryptocurrency industry is not left out, with new jargons being created constantly for novice or newbies. It can be quite challenging to comprehend or communicate in this field and can create a barrier of entry. So that's why TechNews team came up with this article to reduce this barrier of entry for those outside cryptocurrency by providing mostly used slangs and words and acronyms to you for your understanding. So cryptocurrency lingos and explanation. I'm going to take it step by step for your understanding. Let's start with what cryptocurrency. Cryptocurrency is a digital asset designed to work as a medium of exchange of goods and services using cryptography to secure the transaction and to control the creation of additional units of this currency. Examples of such currencies are Bitcoin and altcoin. The next one is fiat currency. Any form of physical paper currency regulated and centralized by an entity. Example, the United States dollar or the yen. The next one is FUSET, a technique used when first launching an altcoin. Altcoin is other coin beside Bitcoin. A set number of coins are pre-mined and given away as free token to encourage people to take interest in that coin and begin to mine it for themselves. The next one is altcoins, alternative cryptocurrency other than Bitcoin. There have been many waves of altcoin following Bitcoin since the inception in 2009. Any form of digital currency that isn't Bitcoin is an alternative coin. Example, Ethereum and Litecoin. Escrow, the act of holding funds or assets in a third-party account to protect them during an asynchronous transaction between two unknown parties. The next one is wallet, a digital or physical address in which cryptocurrency can be stored, sent, received, accessible through a private key. Example is my Ether wallet, Treso, and the Ledger Nano. The next one is the address, a code used to store or send or receive cryptocurrency consisting of 25 to 35 alphanumeric characters. It is also the public key in which keys of pairs use cryptocurrency holders to digitally sign transactions. Example of such address are 35 alphanumeric keys. Hash, the next one is the hash, a mathematical process that takes a variable amount of data and produces a shorter fixed length of output. The next one is the ICO, an initial coin offering, a way in which cryptocurrency projects raise money for their project by offering select amount of coin for pre-sale to the public at a base price. The next one is the blockchain, a full list of all the blocks that have been mined since the creation of Bitcoin or altcoin. The next one is mining, the act of generating new Bitcoin by solving cryptographic problems using computing hardware. The next one is mining difficulty. This is the number determining how difficult it is to hash a new block. It is related to the minimum allowed number of given numerical portion of transactions in a block hash. The lower the number, the more difficult it is to produce a hash value for that fits it. So the next one is block reward. a reward that is given to a miner after successfully hashing a transaction block. The next one is hard fork, an alternative to the block structure of Bitcoin that changes the difficulty rules. The next one is DDoS, a short form for distributed denial of service, a well-timed DDoS attack of exchange during volatility movement may be devastating, as traders will not be able to execute any other manually and will be at the mercy of their preset or lack of limit orders. The next one is proof of work, a system that ties mining capability to computational power. The next one is proof of stake, an alternative to proof of work in which your existing stake or cryptocurrency is used to calculate the amount of cryptocurrency that you can mine. The next one is QR code, a two-dimensional graphical block containing a monochromatic pattern representing a sequence of data. The next one is volatility, the movement of price over time for traded financial assets. The next one is DOX transaction, a transaction for an extremely small amount of Bitcoin which offer little financial value but takes up space in the blockchain. The next one is all-time high, when cryptocurrency has reached its highest value to date, therefore means that the highest historic price for a specific coin is the ATH. Holding, the next one, typo error was made when trying to write holding and went viral over the internet, so simply meaning holding on the specific coin for a long period of time. So because of the typo error when spelling this term, this word HOLD was now used and as a slogan for holding in the cryptocurrency world. So a spin of the movement lingo, hold on my dear life. A cryptocurrency trader who buys a coin and does not see himself selling it for a foreseeable future is called the holder of that coin. Hold simply means hold a position. Bear run or bearish, when the price of cryptocurrency has a tendency to fall and experience sell-off. Bearish is a sentiment if you think the value will decrease over time. The bull run or bullish, when the price of cryptocurrency is expected to increase. We call this sentiment bullish. Also, we have perma bulls, those bullish on Bitcoin or cryptocurrency permanently. Similarly, we have perma bears too. Core, the group of individuals that are most active developing a cryptocurrency, a big block who believe in the scaling path of Bitcoin that increase the block size above 1 megabyte. Notably, Bitcoin Unlimited and other factions and supporters. Small blockers. These are those who believe that scaling path and those that do not require increase in the block size of Bitcoin, namely Bitcoin Core and their supporters. The POW, that is the proof of work, the consensus mechanism behind Bitcoin and many altcoins, ensures that the process of mining and minting this new cryptocurrency is difficult, ensuring the robustness of the network. Miners burn energy and therefore prove their work securing the blockchain and confirming transaction. Proof of work change is something you also hear about, which could be a way of incentivizing the GPU only mining or discourage the miner concentration. The next one is FOLO, fear of losing out. When wanting to make a trade in the market, but you may be too eager and act on fear of losing out, and this drives you to make trades that may be unprofitable. So similarly, fear of missing out is used referring to the same situation. Fear, FO. The next one is FOMO, short form of fear of missing out. This feeling is when you see a huge green dildo on a chart and you don't own that coin, so you sell off all your shit to buy into freaking out. As cryptocurrency trading is still very much driven by emotion rather than valuation, FOMO is a huge factor to consider when swing trading in cryptocurrency. The next one is shill, the act of unsolicited endorsing on a coin in the public. Traders who bought a coin has an interest in shilling the coin and hoping to igniting the public interest in that particular coin. When someone has a vast interest in promoting a cryptocurrency, that's what they do. The next one is ICO, an abbreviation for initial coin offering. When a new cryptocurrency is created and on offer to the public for sale in exchange of Bitcoin, Ether, or other cryptocurrency. The next one is ISO, which stands for initial scam offering. Simply a play word for initial coin offering, referring to the fact that the majority, if not all of them, are scams pioneered by Julian Bulliop to warn people not to lose their money. The next one is KYC, which stands for Know Your Customer, which refers to a situation where you have checked the identity of an individual and have taken precautions so that the money you are receiving is clean and not associated with laundering. The next one is whale, an individual or group of either engaging in buying a large sum of cryptocurrency or selling a large sum of cryptocurrency that is significant enough to move the market price significantly. Traders who can move markets because of their large holdings are known as whales. In 2014, this term was used, bear whales, to refer to a large seller who pushed the price of Bitcoin downwards significantly and was slain by the community. Someone who possesses a majority percentage of cryptocurrency is referred to as a whale. The next one is BTFD, which means buy the fucking dip. A term used when the crowd mentally is dominated by fear. So you should be at the cheaper price of people's emotion, which will equilibriumly bring the bullish again. When the price eventually begins to rise again, when people are running around and selling because of fear, this is the time to buy. The next one is moon, extremely bullish movement of coin, referred to the future expectation of cryptocurrency being valued at astronomically high price. The next one is fraud, that is a fear of uncertainty or doubt. When some people have doubt about a particular cryptocurrency and they share their criticism or lies or create fear, uncertainty and doubt, usually used to form the excess spray or fraud again. Example, JP Morgan demon spread a fraud by using Bitcoin as the base, by saying Bitcoin is a fraud that it will eventually blow up. The next one is wrecked, REKT, losing a lot of money by making a bad trade. The next one is Satoshi or SAT, which refers to smallest amount denomination of Bitcoin. One Satoshi is equals to one SAT, which is equals to 0.000000001 BTC. The next one is CYA or CYOA, which means cover your ass or cover your own ass, meaning that you should take precaution when making an investment. The next one is bag holder, which simply means holding a particular cryptocurrency after the price has fallen and the other continue to sell their coin, while you remain holding your bag of coin in anticipation that the price will increase. It is important for you to realize that whether you bag, hold or not. So if you do not have to exit plan for your cryptocurrency, then you should consider be a bag holder. A person who buys and hold a coin in large quantity, hoping to make good profit in the future. This is a term that is referred to a trader who bought at a high and missed his opportunity to sell, leaving him with a worthless coin. The next one is pump or dump, which refers to a situation where a trader comes together to and conclude, for example, by buying a particular cryptocurrency in order to drive up the price and then sell their cryptocurrency at a peak, while others will be tempted to buy. Pop and scoop, P and S, is the opposite of this scenario of pump and dump. Pump and dump, the recurring cycle of altcoin getting spiked in price, followed by a huge crash. Such movements are often referred to volume, and hence pump traders to buy huge volume may wish to involve FOMO, that is FOMO, from the uninformed investors, and dump or sell their coin at a higher price, inflating the value of these financial assets, and has priced, produced, and acquired cheaply using aggressive publicity and mislead statement. The next one is shitcoin. These coins that are likely to be scam or not worth investing in the long term will be referred to as shitcoin. The next one is ANN. Like to view this in an announcement of a new cryptocurrency project that is about to launch, or on a forum like Bitcoin Talk. The next one is Lambo, a term used by traders indicating high return of a particular cryptocurrency that are likely to make it the future. The next one is DCA, dollar costing averaging, refer to the spreading out your investment and not buying a particular cryptocurrency all at once, but instead buying it little by little depending on the price change in order, and spreading your costs and taking precautions for the losses. The next one is H and S, head the shoulder, refer to the trading view on the chart that predict the price of cryptocurrency in expected to increase, and the opposite when it's expected to decrease. In technical analysis, a head and a shoulder pattern describe a specific chart formation on the and predicts that a bullish to bear trend reversal. The head and shoulder pattern believes to be one of the most reliable and reversal pattern. It is one of the several top patterns that signals with varying degree of accuracy that an upward trend is nearly its end. The next one is C and H, cup and held handles, refer to the trading pattern on the chart that look like a cup in a U shape and handle visible graph with slight drift. The next one is margin trading, a term for trading with leverage. In the instance of trading, you borrow one side of the trading pair and agree on a loan rate and sell for the other side and trading pair. Depending on the direction you believe that the market will move, you can place it on a long short bet on trading pairs of concern. The next one is TA, that is technical analysis, which refers to the use of price action and chart to determine the trading position. See BTC manager trading strategies pattern and learn technical analysis. The next one is long, a position that a trader takes to take a long position on something is to believe that its value will rise in the future. The next one is short, a position that a trader takes to take a short position on a coin is to believe that the value will fall in the future. The next one is limit order, an order placed at a future price that will execute when the price target is hit. The next one is borrowing rates. When you open a leverage position, you will be borrowing a coin and predetermined rates. This rate will be added to and reflected your position, overall profit and losses. The next one is lending rates. Some exchange have lending accounts. You may deposit your coin into the lending account and lend your coin to others to execute their leverage trades. And lending rate refers to the fluctuation throughout the day based on the demand for shortening the coin. The next one is fill or kill. Is a limit order that will not be executed unless the opposite order exceeds this limit order amount. The next one is buy and sell wall. Wall that is seen as an in-depth chart is an amalgamation of limit order of the same price. The next one is circulating supply. The price of a coin has meaning on its own. However, the price of a coin, when multiplied by circulating supply, gives the coin market cap. The market cap. The next one, a stock market cap refers to the market value of a company outstanding share in the cryptocurrency market. The market cap is used to illustrate the coin dominance in the entire cryptocurrency. The next one is arbitrage, the act of buying and selling different exchange to earn difference in the spread. Arbitrary opportunity occur due to the different exchange reputation, community preference, and ease of bank funding. Take note of the fees, limit, and price exchange anytime transferring the coin between exchange during volatile times. The next one is weak hands, those who cannot be patient and sell at lows when the market is down. The next one is token airdrop. Simply put, an airdrop means a coin or token is distributed to the community for free for a small tax. This is done to ensure early distribution and to have many people with keen interest in the game as possible. An airdrop aims to build a huge community easily as people will pay attention to a coin they hold. Furthermore, the tends to promote this coin for their own profit, and it may cost the development team little to achieve this goal of advertisement. The next one is halving or halvening, which refers to the reduction in the mining reward that ensures that the supply is increasing at a decreasing rate. For example, for POW, that is proof of work blockchain like Bitcoin, Litecoin, and Vetcoin. This is a reduction in the mining reward, roughly 4 years. The next one is white paper, a documentation describing a cryptocurrency protocol in a detailed form. The next one is JOM, joy of missing out. The next one is FA, fundamental analysis. The next one is RSI, that's relative strength index. The next one is MCAP, market capitalization. The next one is OTC, over the counter. DYOR, do your research. Bear or bearish, negative price movement. Bull or bullish, positive price movement. Short, margin bear movement. Margin long, margin bull position. Short, margin bear movement. Whale, very wealthy trader in the coin market. Weak hand, a coin holder prone to sell the first sign of the dip. Reversal indicator, someone who is always wrong in predicting the price movement. Rat, when you have bad loss. Reversal indicator, someone who is always wrong in predicting the price movement. RSI, relative strength index. ROI, return on investment. Swing, zigzag price movement upward and downward in the cryptocurrency price. So as the world of cryptocurrency is constantly changing and growing, as well as the technology is evolving, there's continue new acronyms and slangs that will be added to the cryptocurrency dictionary. I hope this will help you through your cryptocurrency journey. I will be creating little guide for all the jargons out there in the cryptocurrency world. A lot of terms get thrown around, and for anyone who is new to the cryptocurrency thing can get a little confusing. I am sure I am going to leave some terms out, and so please, if you know any other terminologies, please leave them in the comment sections below. I will add them to the list. Stay tuned for more. Thank you very much.